Hello, all, and welcome to Neil's World, where I am documenting and sharing my journey to financial freedom. Today's topic: investing versus trading. And someone in the comment section requested this topic, and I'm going through it. Though I am going over this from my perspective, it should not be considered by no means financial advice. If you need such, I implore you, go and speak to your financial advisor or even approach your bank, and they'll provide you with the information you so desire. When you invest, you could lose most, if not all, your capital that you invested. So do your due diligence, research, and speak to a professional. Investing. What is it? This is you put in your hard-earned cash in a financial scheme such as shares, property, or other ventures to ensure that you make a profit, or with the hopes of you making a profit. Sometimes no matter how much you plan, you can't really guarantee that it will work out in your favor because life happens. This method of growing your money is a lot more risky than you saving in your bank. However, the rewards are greater. For example, I currently receive 0.90% on my savings each year from my bank. And this is for my normal savings account as well as my ISA, 0.90%. That's not a lot. And considering that inflation since 2013 to now is approximately 31%. And this is as per the Bank of England's statement. 31%. So on £1,000, you're losing £310 of value, of purchasing power. So when you invest, everything should be calculated. You must look at the company's model, their earnings potential, their current earnings they're having, and the future potential for earnings. Check the current share price, and this provides me with the answer: is this company of fair value? Is it worth me putting my pennies in this company? The information I'm reading, is it giving me confidence in their plans and their mission? I know they're achieving their vision. Some companies are undervalued and some are overvalued. So you want to not do investment in a company that's overvalued if it's going to be long term, because this could go detrimental. Again, do your own research and speak to a financial advisor or a broker when trying to enter a market. They can break this down a lot more in detail for you. Though investment is long term, it requires planning. Like I mentioned before, you have to go and read through their books. Because you're public companies on a stock exchange, you are able to get all the information that you require on them, all their books, all their earnings, all their profit and losses, and you can make your decision based on those information. There are several types of investments, such as your bonds, mutual funds, you've got your ETF, and these I request you go and you read upon a lot more and give you a lot more understanding. I'm only browsing over these. Investment can be passive as well as active. So you have your passive side of it because it's long term. It's not as volatile as, say, currency, and thus you can leave your money in there and let it grow over time with the company. Or if the company's plan has failed and is declining, then you can pull it out. But you don't need to be sat at your computer every single day observing what's going on. Do your due diligence and go. An active investment is where you put your money in for a shorter period of time, but you have to monitor the daily activities of it. For example, in COVID-19, you may have done an active investment and you sold shares in airline companies, hoping that they will fall dramatically over the next 2 years or a year. And it did, so you close out. But each month or each week, you'll be checking to see that it's going according to your plan. You know, if you watch the big crash This is what happened in 2008 when Michael Burry put his money in for the housing market. He went against the market. It took him 2 years before it actually came to results, okay, to fruition. So let's move on to trading. This is where you're buying and selling stocks or currencies over a shorter period of time. Yeah, so this could be seconds, minutes, hours, or even days or weeks with the hopes of making a profit. And those are shorter period of time, you will be able to make the same amount of money that you would have made in a trading, or if not more, over investing. However, the risk is significantly higher. And if you don't understand technical analysis, if you don't have special software, or if you don't know the different patterns and trends in the market, then I wouldn't suggest to go ahead. You need to understand these anomalies in order to make a profit in the market, because about 70% of traders lose their money, blow their account. So you have several types of trading. You've got scalpers, where they enter the market for seconds to take a really risky bet of the market going up or down. And you have the day traders who do their technical analysis, TA, and they do their weekly back testing, analyze the charts, weigh the pros and cons with the news, and they decide to put a long, which is to say buy, or the market is moving upwards, or a short, to say that it's a sell, or the market is moving downwards. Trade using techniques, they look at the charts, they look for trends, they look for patterns in the chart, the candles or the charts, and this predicts what's going to happen next. And this is over time of understanding a particular stock. A specific trend or pattern in one stock doesn't really follow one, or currency doesn't really follow on to the next. Trading is mostly for currencies. Well, I'm doing currencies or gold. So it also takes planning. So over the weekend, I will sit down on a Friday evening, Saturday, and I'll do back testing. Sunday, back testing, and then Sunday night, Monday morning, I'm looking to enter based on the signal I'm looking for. Once I get tagged in or see the alert, the market is reacting the way I expected, I wait for a perfect time to enter and execute my trade. So enter low and sell high. This is the thing. Or you enter low, enter high, and you sell low. So if I'm going to put a short in, I want to get the highest point and ride it low. And if I'm going to put a buy order in or ride the market upwards, I want to buy in lowest point and ride it to the uppermost point. Trading is quite risky. And if you're not a swing trader, which is another type of trading, the position held for short to medium terms. So it could be days or weeks, as I mentioned before. But you're waiting for your trade to play out, and it could take time. Sometimes it happens over a day or a week. And you got position trading. This is where you hold the position over a longer period of time. Like I mentioned before, we could hold it for a week, for even a year, just to get the profit in. Still risky because you're leveraging your money, and that leverage could go massively wrong and you blow your account. So that's it between investing and trading. So now I want you to just take away these few points. In the long term, investing does hold your money in for the longer term. So it gives you time to be passive instead of more active on the screen. So it frees up your time, and it doesn't risk. It's just like even your money in the bank, and the inflation eating away at it. You don't watch it every single day. So when you invest, leave it there because it will grow over time. That's what I do. Trading is more short term. The risk is significantly higher than investing, and it's more active. You've got to set a time. Like I set between 8 and 2 when I'm trading Monday to Thursday, and that's how I trade. I don't really like to trade on a Friday because things change, and it's extremely high risk. And I do this to stay ahead of inflation. Remember, inflation is the rat that eats away at your money. Now, my journey continues, and if you haven't realized as yet, I have a podcast on Spotify, and it's also on Apple Podcasts and all other platforms for podcasts. If you haven't already, go across, follow, and listen to the content. Whatever I deliver here, I break it down even further on the podcast. If you like the content I'm presenting, please like and subscribe and share with your friends. And hopefully, if you consistently put the effort in to make a change in your finances, we can all be winners in the near future. I'll see you all on the next one. And remember, here at Neil's World, consistency conquers.